If you have been trading Boom and Crash with Ichimoku indicator and still losing money, chances are that you are using it wrong. Most traders slap Ichimoku on their charts, see the cloud and think it's just another trend tool. But that's the biggest mistake. In this video, I'll show you the right way to use Ichimoku so you can spot clearer entries, avoid fake signals, and finally start trading with confidence. By the end, you will know exactly how to apply this strategy step by step for more consistent wins on Boom and Crash. Let's get into it. Welcome to the Ichimoku Spike Detector strategy. In this strategy, I'm going to show you how you can use the Ichimoku to detect when spike is about to occur. Now, we're going to set up our indicators. Okay, we're using two basic indicators, and one is your Ichimoku and the second one is your envelope. Okay, the second one is your envelope, and the envelope is just for a second word confirmation. Okay, but our major indicator that we'll be using is the Ichimoku. Then the envelope is going to act as a second confirmation. Before you use this tool, you have to check. You don't have to use your Ichimoku blindly. Okay, in using this strategy, the first thing to do is to go identify the current trend. Is it a bullish trend or is it a bearish trend? Okay, now we're going to be catching spike in Boom. So definitely we're going to do that on a bullish trend. Do not attempt to catch spike in a bearish trend in Boom. No, except it's in Crash. Okay, if it's in Crash, you need a bearish trend to be able to catch spike. But since we are dealing with Boom today, we're going to be looking out for a bullish trend. Now, how do you identify that? You go to your higher time frame. Okay, you're going to be catching spike on the 1 minute time frame, but you need to go to the higher time frame, like let's say the 1 hour time frame. So you go to the 1 hour time frame and check the trend. Now let's head over to the 1 hour time frame. So here we are on the 1 hour time frame. So if you want to catch spike, ensure that it's going to be on a bullish trend, okay, like we have over here. So this is a perfect time to catch spike on Boom. So when the trend is bearish like this, do not attempt to catch spike, even if your indicator is telling you that it has reached the oversold level, is about to spike and all that. No, do not attempt to catch spike, because retracement occurs often when it's on a bearish trend. So ensure that the trend, check out the trend that is on a bullish trend, like this we have over here. So on your higher time frame, after checking out the trend, so the next thing to look out for is major support zones. Okay, major support zone where reversal has occurred or about to occur in the higher time frame. Now let's look at this place. We're going to mark it out. Okay, now when you look at this place, you see that this place is a major turning point, is a major reversal point. When you look here, you can also see that. Okay, here also there was a reversal. I'm going to use my shape to mark it out. So I just come over here, just mark out this. Okay, just mark out the first candle. Okay, that bullish candle that is showing you that the price is about going bullish. And right there, you can, right at that point you are marking out, like this first one we marked out, you can see that there is a hammer. Okay, look out for appearance of candlestick patterns there. Okay, so there is a hammer there. So let's mark out another point. Okay, so you mark out here. So I've marked out the support zones where price has turned and reversed to become bullish. Now let's head over to lower time frame to check out what exactly happened at those zones. But before we go, we'll have to set up our indicator, right? We have to set up our indicator, and we are going to be using, the first indicator is your envelope on your chart, and that's what we have over here. Okay, this line you are seeing on your chart, so that's your envelope. So, and the next indicator is going to be on the indicator window, and that is your Ichimoku. And we also have the RSI, okay, just to mark out the overbought level and the oversold level. So let's head over to our indicator window to add our indicators. Okay, so on the main chart we have the envelopes. Okay, like I told you, the envelope usually have two bands. Okay, it has two bands. Okay, but when you look closely on our chart, we have just one band. Okay, so that's because we have made the second band to be invisible, because we're not going to be using it. going to be catching spike. Okay, assuming we want to be scalping those little candles, then we can activate it. Okay, but right now we're going to be catching spikes, and we only need the lower bands of the envelope. So on the setting of your envelope is the parameters are period 20, shift 0, deviation is 0.400. Okay, please take note of this, 0.400. Okay, then the method is linear weight. Please take note, you can take a screenshot so you don't get it mixed up. Then apply to close. So on the levels, there are no levels. So on the style, this is where we deactivated the other one, made it invisible. Okay, made it invisible so it won't be showing on the chart. Okay, so we had to make it to be the same color as our background, and our background is white, and that's why we use white for the upper band. Now this is the upper band. Okay, so this is the upper band over here, and that's the color. So you click on it and you change it to be your background color. If you are using a black background, change it to be black. Okay, but I'm using a white background and I make it to be white. So the lower band, you click on it and you change it to the desired color of your choice. Okay, so I chose green. That's why you can see green on our chart. So after that, you click on save. The next indicator to add is your relative strength index, your RSI, just to mark out the overbought level and the oversold level. And the period is period 5 and is applied to typical price. Okay, then we have the levels. These are the levels. We have level 20, level 80, level 10, and level 90. Okay, then you click on save. So we'll have the style. We don't need the RSI middle line to be showing. Okay, we don't need it to show, so we had to make it to be the same color as our background. So change the style to be the same color as our background. Like mine, I change it to be white. Okay, so you won't be seeing it showing on our indicator window, only the levels will be showing. Okay, so that is that for your RSI. So click on save. Now the next and the major indicator we are working with today is the Ichimoku, and this is your Ichimoku setting. Okay, now your Ichimoku setting, you have the Tekkensen to be 10. Okay, your Tekkensen to be 10, you have your Kujinsen to be 3, and you have your Sekun Spam B to be what, 20. Okay, so you can take a screenshot of it so you don't forget. Do not tick the fill. Do not tick the fill. So here is where the actual setup occurs. This is very, very important. Okay, on your default setting, all these have colors assigned to them. Okay, they all have colors assigned to them, and you can see the colors over here. Mine, I have deactivated mine, that is why you can't see it, but on yours, your colors will be showing right here. Okay, now you are going to change these colors to become same color with your background, leaving just the Chiku span. Okay, you're going to leave just this. Okay, you can use any color of your choice. Can you see that? So we click on it, change the color over here to our background color. Can you see that? So you click on it, change your color to your background color. Click on the next one also, change the color over here to be your background color. Can you see that? So that is what you do to all three of them. Can you see that? Can you see that? Only this last one, which is the Chuku spam, should have color, and this is it. Let's click on it. Can you see that? So it has the green color. Can you see that? Only that last band, that's what we want to be showing on our indicator window. Okay, on our RSI. So after this, you click on save. Do not forget, ensure you change other colors to become your background color. Now after that, click on save. So these are your indicators, the three indicators we'll be using, and they are going to appear on your charts. Let's head over to our chart. So I'm just going to pull up my indicator window now. Okay, so here we are. We have the indicators on our charts. On the main chart is your envelope, and on the indicator window is your RSI showing the levels, and then this is the Ichimoku. You can see it looks different from the Ichimoku you used to know. This is the exact strategy you can use to trade Boom and Crash and be profitable. Are you still watching? Stay with me. I shall show you step-by-step guide how to use this strategy to make massive profit in Boom and Crash. Let's head over to the 1 minute time frame. Now here we are on the 1 minute time frame. Now let's scroll to check for the major supports that we marked out at the 1 hour time frame. So let's scroll to check. Okay, so here is it. You can see that now. Now here is that support zone you saw on the 1 hour time frame. This is the first support zone. How does this strategy work? After identifying the support zones at the higher time frame, you head over to your 1 minute time frame to use your indicator to detect where spike is going to occur. Now this is boom. You should be looking for spike at the oversold level. Okay, now using your indicator, you'll be able to identify that. Now when we look at the indicator window, we see that our Ichimoku right at this point has hit what? Level 10, and that is the oversold level. Can you see that? That is the oversold level, and at that very point you could see that spike came in. Initially it was going bearish, red candles. Okay, now when it hit the support zone, okay, and it hit the oversold level, level 10, the spike words came in. Can you see that? The spike came in. And to be sure that this very point the spike is going to occur, ensure that your Ichimoku doesn't move from the level 10, like we always check. When you move your chart, ensure that it does not leave the level 10. Okay, let me move my chart. Okay, ensure it doesn't move, it doesn't leave. Can you see that? It doesn't leave. Okay, so that is a sure signal that a spike is definitely going to occur at that level. Now before you enter the trade, you have to wait for the first spike to occur. Okay, wait for the first spike to occur, which is this spike. Can you see that? Wait for the first spike to occur, and once the first spike occur, the next thing to check out is your envelope. Okay, you have to look at your envelope. If your envelope now has crossed from this side and come to this other side of your price, can you see that? So you ensure that the envelope has now come from the left side and now is now at the right side. Then you can open a trade and ride many more massive spikes. Can you see that? This strategy is so simple. All you have to do is follow the guide step by step. Okay, now let's check the second support zone that we marked out at the 1 hour time frame. Let's check it out on the 1 minute time frame. Okay, so this is the second support zone that we marked out at the 1 hour time frame. Now when you look at it, you can see that exactly the same thing also happened just like on the first support zone. So when you look at it, you can see that your Ichimoku right at that point touched oversold level, which is your level 10. Okay, and right there a spike occurred. Can you see that? Right there a spike occurred, and after the spike occurred, your envelope came from the left side and transferred to the right side. Can you see that? Price is now above your envelope on the right side. So after the first spike, you enter the trade and you ride what? Massive profit. Can you see that? You ride massive profit. So this is exactly how to use the strategy to catch multiple spikes in the market. It's easy, it's straightforward, and is beginner friendly. I don't want to make this strategy too complicated. That's why I gave you a very simple and straightforward way to use your Ichimoku so that from today onwards you're going to be profitable. Now let me give you one precaution you should take note of. Okay, now it's not every time that your Ichimoku seems to be on level 10 that you're going to enter for it by. Now let's look at, like I always tell you, you have to move your chart. You move your chart to confirm if it's a sure entry point. Now the Ichimoku here seem to be at level 10. Can you see that? And also a spike occurred, and even the envelope also came over to the right side. But I cannot take this trade. Why? Because chances are that this trade can just, after the second spike, it can just start trending down. Why do I feel so? Because the Ichimoku is not actually at the oversold level. When I move my chart, you can see, you will see that it will leave. Can you see that? It left the level 10. Can you see? When I move my chart, it will leave the level 10. Can you see that? So I will not be confident enough to go into this trade. When I take this trade, it's like gambling with my money. So I'm not so confident taking a trade like this. That's why I like taking a trade. I advise you to take a trade when the Ichimoku is actually fixed on the oversold level, which is your level 10. So with that, you have a sure confidence that is gonna continue trending up. Okay, it's gonna continue trending up. So this is exactly how to use the strategy. It's easy and straightforward. So I want you to go over to your chart and back test it and tell me in the comment section how good it was. It's a simple strategy, it's easy and it's short. Now let me give you a bonus tip of what you should look out for at those entry points. Now on your higher time frame, at the support zone, ensure that you have a pattern. A candlestick pattern should be visible. Now let's head over to the higher time frame. Okay, now when you look at the point at which we have marked out, okay, you can see that over there we have a hammer, and we also have an indecision candle, which is a doji. Now here we have the inverted hammer. Okay, so at this point, when you see these candlesticks present, you know that the price is actually going to turn, and then you go over to your 1 minute time frame, check if your Ichimoku is fixed on the oversold level, and then you wait for the first spike and enter for a buy trade. So that is that for this strategy. Very easy and straightforward. Now before you rush off, hold on, let me tell you. So this strategy works only for Boom 300. Okay, so do not go and use the strategy for Boom 1000. It's not gonna work. Not like it's not gonna work, but you're not gonna get the indicators accurately at the exact point you want them to be. Okay, so this strategy was drafted out specifically for Boom 300. Now the Ichimoku alone can be used for other boom like Boom 1000, Boom 500, and the rest of it. Okay, but the envelope have to have a different setting. Okay, that's why I'm telling you that this strategy is specifically for Boom 300 because of the envelope. Okay, so because of the envelope, we are using it. Because of the envelope setting, we are using it for just Boom 300. If you want to use it for other Boom and Crash, you can just use just the Ichimoku. Do not use the envelope, because the envelope is not going to align with the exact point you want them to be. Let me show you what I'm talking about. Let's head over to Boom 1000 for instance. So now this is Boom 1000, and as you can see, we have our Ichimoku over here, and you see that we have it at level 10, the oversold level, and you can see that right at that point that a spike occurred. Okay, but now look at the envelope. You can see that the envelope is not really showing out. Okay, so the envelope is supposed to be a little bit closer over here, okay, and curves, and you see the curve, but now you can see that you cannot see the ending of the envelope before the curve. So that is why it can't be used for Boom 1000. Okay, it has to have a different setting. I'm going to work on the setting and probably show you that in a different video, but for this strategy is specifically for Boom 300. Please take note, do not use it for other boom categories. Okay, but you can use the Ichimoku for every other categories. Okay, you can use it for Boom 500, Boom 1000, Boom 600, and the likes of it. So this strategy is all you need to make massive profits using the Ichimoku indicator to trade your Boom and Crash. If you got value from those videos, I want you to hit the subscribe button and turn on your notification bell so that you'll be notified when we bring forth many more amazing strategy. So like, come your way again, trade smart and be profitable.